is the beginning of the end, if you like, of fiat currencies. I have no doubt about that whatsoever. And the thing that is so important in this is to understand why interest rates are going to rise and why interest rates are going to undermine financial assets, and why, by continuing to rise, they will also undermine physical assets. And we're talking about everything from residential property to the values of businesses and so on and so forth. We see prices rising quite sharply. This is unexpected. We're told it's transient. But in fact, it's a consequence of all the money printing that's happened pre-COVID and also during COVID and so on and so forth. You debase the currency, you decrease its purchasing power, and that's basically what's happening. And fairly shortly, you're going to find pressure for interest rates to start rising. Now, we've already seen a little bit of jockeying on this story, with the Fed saying, well, prices are rising a bit more than we originally thought, and we will probably bring forth some tapering and so on and so forth. But unfortunately, that tapering is going in the wrong direction. In this sort of circumstance, when people realize that prices are rising, what do? They change the relationship between the cash they own and the goods they buy. They reduce their cash and increase their purchases of goods. So that if you look at essentials, and this is really where it does matter, not the sort of luxury stuff or the expensive holidays and so on. But when you look at essentials, people will start buying essentials that they don't immediately need, that they wouldn't have bought ahead of time before. They're going to go into the market and they buy it, and they drive up those prices even further. The consequence of that is that interest rates will rise. Now, this matters because as far as foreigners are concerned, they see rising interest rates. That equates to falling bond prices, and it equates also to falling equity prices. So the 90% of dollar ownership by foreigners, which is inherently speculative, suddenly starts looking like it's going to leave the scene. And that becomes a major problem. I mean, we've seen what's happened with European gas prices. I mean, they literally multiplied, 5-6 times in a matter of days. It's been really very, very dramatic. China has got virtually no coal to drive its power stations. They're out even buying Australian coal, having put an embargo on buying Australian exports. They are desperate. They're having to shut factories because of electricity power cuts. So there is a big global energy problem. And it is hardly surprising that now that we're all out from COVID, suddenly you have got problems. You have got supply problems. You have got logistics problems and all the rest of it. So prices are rising and they're not going to stop rising. And the problem is we suddenly see that we're moving towards a position where we're actually discarding currency, a pool of currency, if you like, that we have. I mean, liquidity available at any one time. We're discarding that in return for goods. Now, if you discard it totally, then obviously it loses all its purchasing power. I'm talking about not just the individual, but everybody. If everybody catches on, and we're talking about a mass move, if everybody thinks that goods are so much more valuable than cash currency, then cash currency loses eventually all its purchasing power. And it can be quite a rapid process. I mean, as rapid as it takes for us to run out to the shops and get rid of the stuff. So this is a very serious situation. And how do you stop it? The only way to stop it is to do two things: to raise interest rates sufficiently to make people think, now, hold on a minute, I'm better off actually having money on deposit in the bank, earning interest, than actually rushing out and trying to buy things that are probably not on the shelves anyway. The other thing you have to do is you have to stop printing the stuff. You have to stop issuing it, which basically means that governments have got to stop spending money over their revenue. And then there's the third thing you might have to do, and that is you might have to introduce some other form of stabilizing it, which encourages the public to accept that far from something which is going down the toilet, your currency actually is definitely being stabilized. And that's something usually is you tie it to a metallic money like gold or silver. So you've really got to, the first two things you must do: raise interest rates, stop printing money. The third thing you might be forced to do, and that is to introduce some form of gold standard. And that's got to be credible if you do it. So gold and silver are vital, and you can use gold and silver to acquire the assets which you need, or you decide that you may need after the dislocation is over. A dislocation may last. If governments continue, the dislocation could last for some time. If, on the other hand, governments stand back and can't do anything about it, and people sort it out themselves, then I think the dislocation is an 18th month wonder, no more than that. What emerges as credible currency after that, of course, is a completely different subject. But until that bridge is crossed, then gold and silver are the only things that you can really use, which will be recognized as money by anyone else. It's the unwinding, if you like, of Gresham's law. They'll come back into circulation. Now, the key to surviving in this situation is to have gold and silver, because they will be sought by anyone who wants to have some stability, who wants to preserve the real value of their wealth. So gold and silver are vital, and you can use gold and silver to acquire the assets which you need, or you decide that you may need after the dislocation is over. The dislocation may last. If governments continue, the dislocation could last for some time. If, on the other hand, governments stand back and can't do anything about it, and people sort it out themselves, then I think the dislocation is an 18th month wonder, no more than that. What emerges as credible currency after that, of course, is a completely different subject. But until that bridge is crossed, then gold and silver are the only things that you can really use, which will be recognized as money by anyone else. It's the unwinding, if you like, of Gresham's law. They'll come back into circulation.